This is a special episode for the Get Rich Education community, and you get to meet our community. We have our own podcast called the Not Your Average Investor Show. We are big fans of Get Rich Education and Keith Weinhold. I guess you and Keith have been friends for a long time, right, GC?
Keith and I go way back. We got introduced to him through a mutual friend, I don't know, maybe 5-10 years ago, somewhere in the midst there, and instantly just hit it off. He's a wonderful, wonderful educator, one of the best real estate educators in the space. I'm sure the Get Rich Education community knows and loves the podcast, like our community does as well. And so we're just excited to do more and more and more. We have many, many mutual clients. I was looking it up, over 50 homes sold to Get Rich Education clients through JWB. That's over $10 million in real estate that we've been able to help GRE clients acquire and then, of course, grow that wealth with JWB's help. So super strong partnership, and just really excited to welcome everybody from GRE today.
Love it. So if you are here from GRE, checking in the chat, we'd love to see your name and where you're from. You will notice that this is going to be a different experience, right? Because we do this live show every single week. We have a lively community. We've got a couple traditions. So we're going to start it off with one, and then we're going to go with the next one. The first one is the intro, which is, I'm your host, Pablo Gonzalez. With me, as always, is the man that I affectionately like to call GC, because he's got the genius concepts, because he knows how to generate cash flow, because he's a great co-host, and because his name is Gregg Cohen. Say hello, Greg.
Hello, everybody. Fantastic to be with you.
And we have a second tradition of those of you acknowledging you who check in the chat, GC. Do you know what that tradition is called?
I believe it's called the roll call.
It's called the roll call, baby. And it's always kicked off by Mr. MVP of the Not Your Average Investor community. You know who he is?
Mr. Lee Bishop.
Everybody knows Lee Bishop. We got our community manager, Joanna, who's in the chat. She can help you if you have any questions if this is your first time here. We got the ringmaster of the Not Your Average Investor community,
Drew Barnhill
checking in. We got Big Papa in the house. I love it when he calls it Big Papa.
Ops, how are you, my man?
The co-founder of JWB. Greg's dad is a fan of the show. Go figure. We love him too. We got the patron Santorios of Northern Virginia. Michael Santorios. And who else? And we got our favorite smile from the Pacific Northwest,
Pamela Myers.
Pamela Myers. Thanks for making time to join us on a Thursday, Pamela. And Charity Graham, of course, another one of our.
Charity is here all the time.
Charity is showing up.
Super appreciated.
Yeah. Super appreciated, Charity. And we got Michael Phillip from Wasilla, Alaska. That guy's got to be friends with Keith over there, right?
Absolutely. They're out, cross country skiing right now.
How many Alaskans are there? You all know each other, right? Daniel Martinic from Nathrop, Colorado. I've not heard of Nathrop. Daniel.
Fantastic.
Happy to have you here. We got a strong contingency of your average investor community that's out there in Colorado. I can think of Leslie Wilson. I can think of the Mountain Man of Billy Green. Yeah, we got a bunch of folks out in Colorado. So
Misty Johnson.
Misty and Troy Johnson. Yeah. So, if you show up, we do the show every Tuesdays at 12:30. We do it live, 12:30 Eastern, 9:30 Pacific, Alaska time. I don't know what that is. But, we do it. So if you want to make time, it's the same exact time, but on Tuesdays. So, you'll find out about it. You'll get to show up if you like the experience. You can pick a friend in the chat. We are a lively community that hosts inside jokes, but we're also very, very welcoming. So feel free to interact in the chat with anybody that's here that has already checked in and has a nickname. You can assume that they're a regular in the community, and they're more than willing to be your friend and answer any questions. But today, the big question is, and the reason why Keith and team invited us to host this webinar, special edition live show for you, is, doesn't it feel like by the time you find out about a really hot real estate market is too late?
Right.
It does feel that way, right? That's a question. But here's the deal. We want to talk to you about a real estate market that is hotter than molten lava, and it's not too late, right? It is just right now hitting this pace that's about to increase. And it also happens to be a place where investors from all over the world have found it easy to invest in, thanks to what Gregg and his team here at JWB have created. So for those of you who are not familiar with Gregg, I don't technically work for him. I'm just a show host here, and we've become really, really good buddies. And I've become a real estate investor thanks to my buddy here and thanks to our friends in the community. But JWB Real Estate Capital is a company that's been around for 18 plus years. All right, I'm not the numbers guy on the show, just so everybody knows, right? Let's just establish that. So you'll correct
You
me.
got that one right.
You'll correct me. You'll
I
correct me.
will.
But they've been around for 18 plus years. You've built a team of 120 plus people that manage over $1 billion in real estate assets. That includes 6,000 single family homes for over 1,700 investors that may or may not have ever even been to that property.
That is true.
Right.
You nailed every one of those numbers. Congratulations, buddy.
5 years
I feel
there.
like you had like a Will Ferrell like blackout moment there.
You know what it is I was just doing a little bit of writing about it, and I actually wrote that for the next
Well done.
guest webinar that we're doing. So full transparency, I write a lot about this stuff. But that being said, the mission has been make it easy for people to invest in rental properties. And you've made it so easy, GC, that you've been featured on the front page of the Wall Street Journal a couple of times. You've won like Ernst Young Entrepreneur of the Year Award. And you get featured in like best places to work all the time. You want to just kind of give them a little bit of what did I miss there?
Well, I mean, thank you for helping everybody understand that. You know what? We kind of know a little bit about real estate investing. I think the bigger thing than some of those nice accolades, and certainly the size of the team is something that is a differentiator for JWB. The biggest differentiator is I'm one of you. I'm a real estate investor. I've been putting my own money into single family rental properties for 18 years here in the Jacksonville market. I've been able to have a lot of success, but more importantly, been able to help over 1,700 JWB clients grow their real estate portfolio. And most of them would never, ever call themselves real estate investors, to be quite honest.
Yeah, true.
Right?
That wasn't me.
We've been able to pioneer this way for everyday people to take advantage of this beautiful asset class and to do it passively. And we do manage over $1.3 billion in real estate assets, and specifically we've generated over $300 million in profits for our clients. And some of those clients are right here on the show right now, and of course working with GRE. I think our mindset, I know in talking with Keith, often like I do, we talk about things like the 5 profit centers. We talk about how important population growth is. We talk about the dynamics of why real estate is so successful.
Mm-hmm.
So it's just a beautiful collaboration with the GRE community, and something that I know that we can help you grow your portfolio if that's something you're interested in.
Yeah, cool. And just so you know, like I'm active in the chat along with the rest of the investors. That's me chatting in there. Gregg is too important to this conversation to like have his mindset divested in here. So, but we're very interactive with it, right? So if you have like a question, put it in the Q&A and we can get to it. If you just want to interact and make a friend, I see Drew and Lee and Pam already, jumping in there, and everybody that checked in. They're all super savvy real estate investors that have invested with JWB, don't work for JWB, and are happy to give you their opinion on that stuff. But that's not why you're here, right? You're here because we told you that there is a really great market to invest in that is hot as heck and getting hotter, right? And that market is Jacksonville, Florida, which happens to be where we are right now, where I own 5 properties, where Gregg owns 400 properties, and the rest of the folks here do. And what we are here to do is just share some like insider knowledge on it, essentially. Mm-hmm. But I think the first thing to talk about that isn't necessarily insider knowledge, it's just like underreported knowledge, is the idea that most people, when they go to invest in rental properties, mm-hmm. they kind of get the order of operations wrong, right? Like when you are buying a rental property as a passive investor, you're going to buy it once and hopefully own it for the next 30 years, and your family's going to own it after that and all that stuff. And folks kind of like spend 90% to 99% of the time looking for a property. And then they're just like, okay, who's going to manage this thing? Mm-hmm. And the market is just kind of this like other equation of just like, it's just because somebody told me that they have a property for me in this market, or it's because I live here, or something like that. But if you really think about it, the best way to do this, based on the fact that you're going to own this for a long time, is to find that teammate that's going to manage the property for 30 years for you, that you can really, really trust, make it passive for you. And once you can understand what that looks like, you look into markets that have these types of teammates. And the market is really, really important, right? Because your property is only going to appreciate at the rate of the local market, and maybe, and that's the standard deviation that where it starts from, mm-hmm. right? Like then there's other things that the team can do to ramp that up or down, but it's going to be pegged to that. And we know that the majority of wealth is built off of home price appreciation. And if you have the right team in the right market, the property is pretty easy to find, GC, right?
Yeah, absolutely. It's a way to kind of ride the path of, we talk about the path of progress, right? It's kind of a way to just identify the path of progress and then jump on that wave. It's an easier way for you to be able to understand how you're going to earn your rate of return, the size of the profitability. And what most investors don't understand is that there are time-tested, easy ways to identify which markets are positioned for growth more than others. And that's the missing piece. And that's one thing that I hope that we can share today, especially for those who aren't so familiar with the Jacksonville market.
Let's do it, GC. We are super pumped to talk to you about Jacksonville and give you all the insider information that we know here. One thing that I didn't mention is that apart from, managing $1 billion of assets and 6,000 properties here to 1,700 investors, you and the team have purchased 20 city blocks of downtown Jacksonville and are actively developing that. So there really isn't anybody with more insider knowledge and data than the team here at JWB in the Jacksonville market. And that's what we want to share with you in this Jacksonville real estate market report, to just kind of like put you onto this idea of like hot tip, right? That being said, there's going to be some really cool data in this report. And if you want it, all you got to do is text Tiara at 904-293-0341. That's 904-293-0341. I'll put it in the chat in a second, or maybe Joanna, you can help me out. But you're going to text Tiara personally, and it's really interesting how you guys have done this, but you've essentially turned this data flywheel that you have here as a resource for everybody else. And Tiara is kind of like the keeper of that, right? Like if you can text her for the slides, let her know that you want the slides from this presentation, because she gets texts all the time, because you can also text her just about any other question that you have in real estate investing, in the Jacksonville market, in rental properties, and she's going to get back to you based on the expert knowledge of the team, right?
100%. Think of her as a resource. If you're somebody that's thinking about investing in one market versus another, really hard to compare apples to apples. So think of Tiara, think of JWB as a resource. We can sit down and compare those numbers, apples to apples. You'll see in this report, when you do request the slides, there's a lot of really important information on multiple markets.
Yeah.
And we can do that for you, in whatever market you're considering about investing in. So make sure to use that resource. It's certainly something that can help you.
The smartest investors use this resource as, I'm looking at this property, send her the deal sheet and let her know and ask her what's great. Right. So happy to do that too. And we'll even make a show about it if it's good.
Mm-hmm.
If it's a good deal, or especially if it's a bad deal. All right. Well, that being said, let's get into it, GC. The Jacksonville market's got some pretty eye-opening stats, my friend.
It does. And, for 18 years, I have been evangelizing Jacksonville, and I've been putting my own money into the Jacksonville market, and clearly I'm biased, but beyond just the love that I live in, I am a real data nerd. And so I'm constantly looking for something where, people will say, Greg, listen, you're clearly biased. You love Jacksonville, so clearly you're going to think it's the best market. So I'm looking to get one step ahead of that, and I found that data is the best resource to do that.
Yeah.
As I mentioned, we make a significant amount of money every year to have access to data for every real estate market out there. And so it gives me the opportunity to compare Jacksonville's market with everything else out there. All that being said is, guys, I have found some incredible stats specifically about our beloved Jacksonville that I want to share with you. And as a marketer, which I know you are,
I love these stats, boy.
I want to be marketer. I can tell you that. I love the term only.
Yeah.
The term only is one that's really, really important. Well, I'm here to share with you that Jacksonville is the only real estate market in the country that can claim these four things. This is below the median for the U.S. Price growth above the average for the U.S. Home price growth above the average for the U.S. and population growth above 2%. Those four things are the most important factors that you can have in a rental property decision. And Jacksonville is the only market in America that can claim that right there. Our home prices are 13% below the U.S. median. We are the fastest growing median income of any major Florida city. We have the fastest growing population of any major city in Florida. And the Jacksonville population has grown over 5 times faster than the population of the U.S. over the last 5 years. Clearly, there's a reason why people love living here and more people want to come here. And what that means for you as a real estate investor is that you're in a position of strength.
Yeah, this like tabulation of these stats is actually pretty fresh to us, right? Like I think you showed me this or you mentioned it to me maybe like 6 weeks ago. And I was like, what? So what now? Let's put this out there, buddy. Because as somebody who moved here to Jacksonville 5 years ago from like a much more expensive city, Miami, I'm sure I'm going to mention it at some point here. The quality of life here is unbelievable. And the rapid rate of growth here is very feelable, very prescient, I guess is the word.
I like that.
And it is shockingly inexpensive, right? Like the moment that I moved here, I was like, oh my God, I lived in Orange County, California, Huntington Beach in my early 20s. I was like, this feels like what I was living in 18, 20 years ago in Orange County, right? Like the demographics of the people, the beachside lifestyle, the weather. And what I really noticed when I was there in my early 20s is all these people got rich off of real estate in the last 10 years.
Yeah.
Like that's where the wealth came from. It was largely blue collar folks that had built wealth off of real estate because they happened to own their home there. So this idea of prices below, these stats that we just went over, right? Like prices below the US average, inexpensive, good deal, right? Like home price appreciation and population growth that are outliers are, this and rent appreciation that's happening is risk mitigation, right? Like and upside that's baked into it. So I think from a high level, that. But then, that's coming from us. There is an institution out there that's called the ULI, right? It's called the Urban Land Institute. And in my previous career in construction and development, I used to pay a lot of attention to this. As I'm married to an architect who's an urban designer, she pays a lot of attention to this because it's like the publication, the institute that really thinks deeply and gathers the data around like what makes great cities work.
Right.
And they have this report that they do yearly where they rank the top 70 markets and they put them into these different categories. At the top of the categories, which essentially is just like the most attractive, fastest growing cities, are the magnet cities. And it goes all the way back down to like the backbone cities, right? Like the cities that America was built on that are kind of like not really growing anymore, but they're important. And in these magnet cities, they put three categories called the Super Sun Belt, 18-hour cities, and supernovas. Right. Super duper novas, which is essentially these cities that are experiencing this really phenomenal growth rate that has like a really bright future in front of it. And there's 5 cities on that list, which are Austin, Nashville, Boise, Raleigh-Durham, and Jacksonville. And once this report came out, right, like I'm a big believer in guilty by association. You're the average of the 5 people you hang around with, however you want to put it.
Right.
I think that when I think of Austin, Nashville, Raleigh, and Boise, I think those are all super sexy cities that everybody's heard of. Maybe Boise has like crept in recently, but it's on the map, right? Like it's on the map as these like tech centers and these like thriving places and blah 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 blah. And yet, when you talk to people about Jacksonville, I don't think that that's what they think. And yet, ULI does.
It's exactly right. It's like which one of these is the other?
Yeah.
I think most people are asking if you're paying attention to this report. What a beautiful opportunity that investor. But you think about Austin, Boise, Nashville, Raleigh, thriving economic engines. They have a ton of population over the last decade. And just think about yourself as a real estate investor. And let's take some, give the ULI some credit here, right? They know what they're doing. They are helping to inform developer dollars, investor dollars, those who want to place make in cities and change and bring their companies to locations. So very influential. When they call something like a magnet city, or they call something like backbone or niche or establishment, think about where do you want your money? What category do you want your money in? If you're like me, I want my money in magnet because magnet means that people are attracted to it. And when people are attracted to a city, that means more people are moving there. And as a rental property investor, that's population growth, which drives rental demand and housing demand. So just going on the names alone, we want to be in magnets. But if we could be in any of the magnets, we want to be in supernovas because supernovas are the ones that are the brightest. They are the ones that aren't 18-hour cities yet. They haven't reached that level of establishment. And so the upside of a supernova city would be higher than some of your other super sun belts and 18-hour cities. And then if you're thinking about where to invest in magnets and supernovas, find the one that is the most under the radar of the supernovas. That's where Jacksonville lands. And that's one of the reasons we're so excited about it.
I want to get into this question that you asked, which one of these cities is not like the other, right? Because I think therein lies the value of what you just said, right? Like, how do you find the undiscovered gem in a room full of diamonds?
Right.
Right.
Yeah. We're in good company. How do we find the one with the biggest upside?
Yeah. How do we find the biggest upside? And before we go there, GC, I have to apologize. I messed up the audio setup to start right now, but now all the mics are on. Everything is working well. So I just want to ask the community, if you're here, let me know in the chat. Have you been able to hear Gregg this whole time? I think you have. It's been coming from my computer and I've been kind of like fidgeting with papers on top of it.
Oh, nice.
But now he's got his very own microphone and I
have a voice.
You have a voice.
Incredible. Wow. Well, it's really nice to meet all of you.
It's really nice to meet all of you. So that being said, let's answer this question. Yeah. Oh, okay. Lee was saying we have, but it was making us lean in. All right. I wish that was on purpose, guys. Much clearer now. Thank you, Michael. I appreciate the feedback. Listen, this is what makes our show so great, is that it is a open conversation with our community. And every once in a while, it is a very necessary feedback conversation of like what we're doing wrong here. So I appreciate you all chiming in. GC, comparison of supernova cities. Boise, Idaho, right? Like this is, which one of these is not like the other? Boise, Idaho, Austin, Texas, Raleigh, Durham, Nashville, Jacksonville is the group of supernovas that we are talking about, right? Median home prices for Boise is $491,000 with a median income of $87,000 and a population growth of 2.6%. Median home price of Austin, Texas, $456,000 with a median income of $98,000, population growth of 2.9%. Raleigh, Durham, median home price of $500,000, median income of $92,000, population growth of 2.1%. Nashville, Tennessee, median home price of $488,000, median income of $81,000, population growth of 1.6%. Jacksonville, Florida, median home price of $366,000, median income of $81,000, population growth of 2.2%. Which one of these is not like the others?
Look at home prices right there. You can get into a supernova city for over $100,000 less than going to these other more established supernova cities. So when we're asking which one of these is not like the other, that's a great thing on the pricing component. But I also included the median income and the population growth because I want to make sure that you feel like and understand that you're not giving up something in order to get in at a lower price. In terms of median income and population growth, we are just like the others, Boise, Austin, Raleigh, Nashville, when it comes to median incomes and population growth. So just by the numbers, a unique opportunity to get in. And what ULI is saying is this is not going to last for long because the demographics and the population growth that has already been happening for years and years and years and years would lead them to believe that Jacksonville will become more like Boise, Austin, Raleigh, Nashville in terms of median home sales prices.
Yeah, when I think of which of these is not like the others, I think of any of these cities. Anybody that knows anything about real estate would undeniably be like, hey, if you invested in Nashville, Raleigh, Austin, or Boise 10 years ago, are you doing well? They'd be like, yeah. If you could get a time machine and go back 10 years and invest in Nashville, Raleigh, Austin, or Boise, would you do it? Yes, right?
100%.
10 years ago, that's where these, these prices are comparable nowadays in Jacksonville to those prices back then. And it's a supernova city right now. And I think when you think of this idea of lower priced city, you naturally think of giving up salary potential, right? Like my story reflects that. I left Miami looking for a lower price city, looking for a higher quality of life for my money. And I was in my head thinking that I was ready to give up on, pay a tax, right? Like I would sacrifice some income potential and I would sacrifice like my network and the people that I knew in Miami. And it just really hasn't been the case, right? Like I've I'm an entrepreneur and I've been able to like prosper here. But I think when you think about my wife's journey, who is an architect, is a W-2 employee, she was able to leave her job for a year and a half because lower cost of living.
Mhm.
And when she decided to re-enter the labor market, she re-entered the labor market making 30% more than what she was making in Miami, an expensive city that's supposed to have higher wages. And we sit here 5 years later after having come to Miami, and she's making more than twice what she was making in her W-2 job. So that's just like a story to illustrate this idea that while it's not like the others in cost of living, it is like the others in median income. And therefore, the renters that you have there, the residents that are going to live in your home and pay for that other profit center principal pay down that I know Keith loves to talk about, they're more than well equipped to do this, even as prices go up in the city.
100%. And your wife, Martha, is incredible talent, and she has done so well for herself. And the great thing is that she's not alone in Jacksonville.
Yeah.
Jacksonville's median income has risen just about 25% in the last 5 years. That's almost double what the national rate of median income growth is. So this is a place where you don't have to pay that tax, let's say, of coming to a better quality of life. You don't have to give up income potential. And many people don't realize that about Jacksonville.
Yeah.
That our income is just the same as what Nashville is, right?
Yeah,
So,
it's pretty good.
but there is something that I wanted to take a deeper look and say,
Yeah.
okay, well,
Well, first, before we move on to that, I think it's just important to drive the point home that like we are saying all these things because we're thinking like real estate investors, right? So this idea that it is a growth market, it has a high median income that is comparable to other growth markets and expensive cities, and also has a lower price point, means that what we see is upside, right? Because it's a growth market. So we expect it to appreciate in comparison to these other growth markets that are appreciating like crazy and everybody wants to get in. It has risk mitigation because we see high salaries being able to pay the high rents that, the rents that will continue to increase, which increase our cash flow as real estate investors. And we see a good deal. Right? Like, so if you're telling me, man, if I can get upside, I can get risk mitigation, and I can get a price discount, like that's what I like to buy.
Right.
That's what I like to invest in for sure. Right. So I just wanted to just kind of like frame that for everybody.
Yeah. And that's why JWB clients who have invested in Jacksonville over the last 18 years have generated over $300 million in profits.
Yeah, 300 million.
Our average rate of return has been 22% year in and year out. That's the net result of those three components that you just pointed out, and making an investment in a market that has those dynamics.
Now, this is the really interesting piece, right? Like this is not just what do all these cities have in common, high prices that are higher than Jacksonville, but there's another key thing indicator that ULI is very keen on. It's why we're in these like supernova category, and it's what you see.
It is the fact that Jacksonville is the only supernova city that does not have a revitalized downtown yet. Part of the big reason why those other 4 supernova cities became supernova cities is that their downtowns came online, became revitalized, and that became a huge economic driver. And that has had a big impact and why their home prices have gone up so much, especially over the last 10 years. But Jacksonville is the only one that doesn't have it yet. But that's about to change. We'll tell you a little bit more about that. So here it is by the data, though. I like to connect the dots on why certain things happen and how you can benefit as a single-family rental property investor. And guys, if you can hitch your wagon to a downtown that is about to be revitalized, it is the best path of progress you can be a part of. Many people say, oh, you know what? I want to buy a single-family house next to a shopping center that's about to go up, or maybe a great grocery store, or maybe a great school. Guys, I'm here to tell you, all of those don't mean nearly as much. I don't know how many times it's more important it is to find a revitalized downtown, but it makes those other ones seem like small potatoes. When you can hitch your wagon to a downtown that's about to come online. And the reason is, sure, there's upside, which we're going to talk about in just a second, but it's a beautiful balance of upside with risk mitigation. Because when a downtown prospers, it creates this economic engine, this flywheel. More people want to move downtown. More bars and restaurants and amenities come downtown to serve those people that are moving downtown. And then rents go up. and more employers come in and more jobs move downtown and more developers see opportunities to develop more properties. And it creates this economic flywheel. Well, when you invest in single family rental properties surrounding that downtown, you get the best of all worlds because you get the indirect benefit of home prices going up substantially higher, but you didn't have to take all the risk. Because if you want to buy one of those downtown buildings and actually invest in downtown, it takes a lot of money.
Cashish.
And it's a lot of risk. And it's only available to accredited investors most of the time. But as a single family rental property investor around, it's you, it's me, it's everyday investors. And we get the indirect benefit of the upside of the revitalized downtown. But what are we investing in? We're investing in assets that pay for themselves every single month. Beautiful, single family rental properties in workforce housing neighborhoods that produce positive cash flow. So this is the hidden gem that we evangelize within our community here for many years now that most people don't see.
Yep.
And downtown Jacksonville is on the cusp. But I did want to share with you, if you look at the data, revitalized downtown cities have appreciated 23% more than the US overall since 2012. That's looking at some of these very well-known cities like Austin, Nashville, Tampa, Denver, some of these other
So
cities.
2 supernova cities and 2 other cities that are also on the magnet list that are already 18-hour downtowns.
Exactly.
Yeah, correct. And, Greg has put together all this data. He's the data nerd. I'm the storyteller here. So we have these like studies on Austin, studies on Nashville, right? The other 2 supernova cities. You want this stuff, text that number, 904-293-0341. Be the most interesting person at your next cocktail party and get these statistics, right? My lived experience, right? Like I'm not the stats guy. I'm the story guy, right? So my lived experience, you may or may not have heard, I'm from Miami, and I lived this, right? Like I lived this like renaissance of Miami coming online. I remember if you watch the Bad Boys movie series,
Yeah.
right? Like if you watch Bad Boys 1, there's 3 skyscrapers. You watch Bad Boys 2, there's like 12. You watch Bad Boys 3, there's like 40. You watch this latest Bad Boys, it looks like Manhattan. And I remember living in Miami, looking around an empty downtown that was dead, and people telling me this is going to be the most dense urban area south of Manhattan in the United States. I mean, being like, yeah, sure, buddy, right? And consequently, what's happened in Miami is prices have gone cuckoo bananas, right? Like, and in Miami, this like workforce housing sector has become like the most, sought after, highly demanded, lowest supplied thing that has happened. And I've seen this, right? Like, this is why, for me, seeing what's happening in Jacksonville has allowed me to like push, has been the signal that I've used to like guide the decisions for me and my family, like push our chips into it, right? Like the belief in this thing, because I believe it, I see it. But for those of you that don't get to see this and believe it, there is some really, really significant numbers, right? Like, as we know, right, this You Alive folks do these studies, and it's been down to a science of like what makes a downtown tip. And the punchline of the story here is that once there's 10,000 residents living in an urban core, it tips. And by it tips, I mean that a functioning downtown needs mixed use development. It needs storefronts on the bottom and residents on the top, right? If you think of any downtown that you've been to that works, from New York to Greenville, South Carolina, which is a small city with a really well functioning downtown. It's this mixed use stuff that happens. And when developers are building in the city, what they're looking for is these 10,000 residents, because to get the project done, they need to go find what's called an anchor tenant. Who is going to be the grocery store downstairs that will mostly float the bill for you, so then everybody else can like come in and like pay for the condos above it. And before 10,000 residents, they're not as interested. So cities have to create these incentive packages for developers to like invest in this stuff. After the 10,000 happens, now Whole Foods is like, heck yeah. Yeah, now Safeway's like, oh yeah, I'm in. Count me in for, give me 2, right? So like, that is the key number. And what's happening in downtown Jacksonville is that forever, I didn't get to live this because I wasn't here before this, but like, it seems like forever it was like 3,000 residents downtown and it wasn't really moving. And from like 2017 till now, that number has continued to increase and increase and increase until the point where right now we've gone from just 4,800 residents in 2017 to we're crossing that 10,000 resident downtown threshold as we speak.
Right.
Right. And that is, in no small part because of amazing developers that see the long-term future in the city. And you're one of those, right? Like you guys have bought these like 20 city blocks. You believe in this vision. You know that if downtown works to a certain way, then all your investors that own these properties around them is going to help. And that has helped us get us over that hump of this number.
100%. I mean, this data is here and it's been proven if you look at these other successful downtowns. So if we understand that hitching your wagon to a revitalizing downtown is the best path of progress, the best risk-adjusted return that you can make as a single-family rental property investor, if we understand that, and then we want to know, okay, how do we identify those next revitalized downtowns? Well, it comes down to population growth in that downtown, and that 10,000 resident threshold is so important. And the next thing to look at is the dollars. How many dollars are actually being used for construction at this moment? And when you start to see those two things trending very, very high and very, very positive, that's your indicator to say, okay, you know what? Something special is happening in that downtown. How do I build my army of income producing single family rental properties right around that? Because that's how you can put yourself ahead financially. That's how you can create a better retirement account. That's how you can send your kids to college. That's how you can get rich slowly here, which is, I know, what our Get Rich Education subscribes to, as Keith and I both do. So here's the dollars then. And this is mind-blowing. Most people would never know. I'm in Jacksonville all the time evangelizing Jacksonville, and I have never seen the look on somebody's face when I tell them this stat, and here in Jacksonville, I've never heard them say, oh yeah, I knew that. Here's a stat that'll blow your mind. We have $4 billion of active construction going on in sleepy old under the radar Jacksonville.
Yeah, this isn't renderings. These are not plans. This is like dirt being moved, cranes in the sky, excavators, and steel and concrete going up, and glass, right?
100%. And JWB is 20 million of that right there, as we've been renovating these long-standing, vacant, historic, beautiful buildings, which are beautiful now, and turning them into mixed use. I was just downtown yesterday touring our new office, which we'll be moving into in the near future. I call it next year sometime or around there. But the big thing here is, as we move our 130 or some odd folks into that building, what do you think's downstairs?
Grocery stores, coffee shops, bookstores.
We're working on the coffee shop, and I'll tell you, it's a beautiful high-end restaurant.
Oh, that's nice.
We haven't been able to announce the name yet, but the lease is signed, and it is going to be spectacular. So you're starting to see this work, and we're not the only ones. Of course, there is a ton of bigger developers than JWB, but there is this force that is happening in downtown Jacksonville, and I want to show you all the numbers behind it so that you can make wise decisions to get on the train, because this is the best representation of risk-adjusted returns you can have in single-family rental properties.
Yeah, and I kind of rushed through these slides a little bit because these are just other comparisons of where Jacksonville and Austin were comparing to downtown, 13 years ago, right? Like this idea that these cities, downtowns that have come online, and it is a big part of their growth. Jacksonville is already rated as a supernova city. You can text to get these, right? I don't think it's particularly like compelling long form conversation, but you can text to get these numbers and be interested in those stats, right? But the idea that they've become supernova cities already, this growth is behind them. They're considered supernova cities. This growth is ahead of us, and we're considered a supernova city, right? So like that's there. It reminds me of Lee Bishop, our MVP of the community.
Of course.
His question saying, the great slide is missing a stat, I think. Maybe you should include how long have these others been a supernova, and are they static or growing or falling? We know that Jax is growing and becoming better. Lee, I would say that, the supernovas are all growing. That's why they're called supernovas. The missing information here in what you're saying is that there's the other magnet cities are already 18-hour cities and super Sunbelt, right? And they're already at like a specific price point that is, beyond all this stuff. But ULI has deemed the supernovas, the ones with the most growth ahead of them, these 5 cities.
Yeah, I know that's why ULI put us on here as a supernova, but I think he brings up a really great point. It'd be cool to see the movement of these cities and what they have been deemed year over year. So I think that would be pretty cool. So
Oh,
Lee,
that'd be cool.
we'll look that up for sure. And it's something that they produce this report yearly. So I bet I can go back and see, when did Denver go from supernova to 18-hour city, or did it go from supernova to 18-hour city? So
Yeah.
it's really great idea. And we'll get that information for you.
That's why they call him the MVP, folks.
Clearly.
He's got great ideas. He contributes to the community. So here's the question, right? We know this about Jacksonville. It feels like a super hot market, right? Like, is it time to invest in this thing or not? What do you say, Juicy?
Well, as you can probably tell, the answer is yes, this is the time to invest. There are a number of very important, what I would call urgent, time-sensitive things that are happening in our economy right now and in real estate specifically, that if we can understand what's happening, we can put ourselves in a position to take advantage of it financially and set ourselves up for years and years down the road by the decisions that we make today. As we've shared with you today, if you look at where Jacksonville is positioned to these other supernova cities, it's easy to see that there are lower home prices today than there will likely be tomorrow.
Yeah.
So if we talk about this idea of getting a deal, right, and we see what a supernova city looks like, and we're hundreds of thousands of dollars below in pricing those other supernova cities, you can see that. But that's not the only reason that purchase prices today are lower. What we also have happening right now is interest rates are coming down. And when interest rates go down, asset values go up. When interest rates go down, asset values go up. What that means is that home prices go up. There's a lot of data to back that up too. I hope you'll continue to join us on our show where we share that data routinely. But you have got two big things happening right now, specifically in the Jacksonville market, where it's likely that prices will go up in the future. From a JWB perspective, there is not a better time to buy in terms of your ability to get positive cash flow day one. When JWB clients purchase homes with us, the homes are already rented, they're positively cash flowing, and they have long-term leases signed by my team. Everything's vertically integrated, sort of handed to you on a silver platter. And then interest rates, as we were talking about, this might blow your mind too. JWB clients have recently been closing at an interest rate of 4.95%.
Okay.
In the fours again. So these are rates that are possible because of our relationships with our lender base. You're not going to find 4.95% out there when you go and talk to somebody else. But overall, rates have come down. And then because of the advantage of working within the JWB network, our clients are able to get incredibly low interest rates and only a 25% down payment, which limits the out-of-pocket. At the same time, we're continuing to honor some incentives that we started to honor when interest rates were higher than we all wanted, and we haven't pulled them back yet. So we are honoring the incentive of covering maintenance costs. So we cover between $4,000 to $6,000 of maintenance costs per property that clients purchase now. And of course, this is tied to, as interest rates become lower, what you're going to see is that incentive specifically will go away at some point in the not too distant future. So investing right now in Jacksonville with JWB is a fantastic idea, and I hope you all take us up on it. The best thing to do if you're interested is just text Tiara. You can text that number, again, 904-293-0341. You can let her know that you'd like to jump on the phone with us if you have any questions, if you like these slides, all of those things. She's right on the other end, and you'll have a nice two-way text conversation. You can also email us at info@JWB Companies, but I can't stress the urgency more than right here, right now is a good time.
Great question by Michael Phillips. Are they 1031 friendly?
Oh, I love that question, Michael. Yes, absolutely. Couldn't be more 1031 exchange friendly,
Right. Yeah.
to be quite honest. When you work with a vertically integrated provider, they're going to have inventory that is already built and rented and ready for you, because as a 1031 client, you have specific timelines that you need to hit. You have 45 days to identify a property. You have 180 days to close on the property. It's really hard to hit those timelines if you're just going through it the normal way.
Yeah.
Working with a vertically integrated provider like JWB, we have this inventory already rented. And it'd be as simple as you jumping on the phone or shooting Tiara a text, jumping on the phone. And within a few phone calls, we have those properties identified and you're on the way to closing to make sure you can take advantage of the tax savings that you'll be getting with your 1031 exchange.
Such a good question by Michael, right? Because Michael, I get a sense that you're in the GRE community and this is your first time here. You probably don't know that 5 years ago, I knew nothing about real estate. I didn't know what a 1031 was. I probably only know what a 1031 was maybe like 3 years forward that I can actually explain it. And being such a novice, I get to see it differently, right? And like what I realized with the 1031 exchange is, and getting to know so many members of our community that are also real estate investors and speaking at real estate investing events now, and being one myself, is this idea that, the 1031 for people that have a portfolio of properties, sometimes they have like the one headache property. Right? Like maybe you bought it in the wrong market or you have the wrong property, the teammate, right? Like you made the mistakes that everybody makes. It's totally normal. And the opportunity for a 1031 to like take one of these like things that are headaches and upgrade to a better market, a better team, and a better property experience is very, very real. But right now, as we all know, there's been very low inventory in real estate. It's been very hard to like find a property. And for the 1031 to work, you need to have this, a certain amount of time that you have to have properties identified and a certain amount of time that you can close on it. So it creates this like risk of like, man, what if I, sell this property and I can't do this? Now I'm stuck with a tax bill and I don't know what I'm going to do with this money. This idea of having a vertically integrated provider like Gregg describes, which what he means by that is that JWB right now owns properties that are already rented, that are already cash flow positive, that are available to investors that already have a team that's going to manage it. Right. And they own more than one of those that you can pick, right? So like we've had these conversations with past members of the community, if a deal comes through, you have a backup property and another backup property after that, which is crucial to getting that done. Yeah. So it is really the ultimate solution for a 1031.
And we should just talk. I mean, we have 10, 20 homes available at all times for clients. And we have over 1,000 lots that we haven't even built out yet. And we probably have 400 homes in the process of being built right now. So it is a well-oiled machine to serve a 1031 client more than most. Because it's very common when folks, even if they do identify a property, if they wanted it to be new construction, let's say that they identified that property, the construction is supposed to be done this month, but guess what? It goes 3 months over and you can't close on your 1031 like you wanted to. But you don't have to worry about that with a vertically integrated company who has such roots in one market like we do here in Jacksonville.
Yeah. So great question, Michael. He's new here also. So man, you're so welcome here, right? Like this is absolutely a community that welcomes newbies. I think Michael said Torios, great name. Michael says we're all here to help you if you need, right? So like you can reach out to anybody in that chat and they'll give you their number, I'm sure. And you can have a private conversation that, it doesn't have to be with us, or text Tiara. She can help you as well. 904-293-0341. So GC, to summarize everything, I have kind of like a couple points to summarize here of like what the main ahas are. The main ahas here are there is like the most prestigious city research institute that we know of has deemed these 5 cities supernovas that they're all gonna do really, really well in the future. People investing there, they're saying will experience a lot of upside. Out of those 5 cities, there is one that has a much lower price and this like baked in upside that is kind of like the insider information that we're privy to, that is this downtown piece. We are also in a time when the market in general is very friendly to all real estate going up, right? So there's this like institutional thing, knowledge. There's just like insider stat of downtowns that we've discovered. There's the fact that interest rates have gone down, markets going up, and it's in a place where you have a vertically integrated provider that's like best case scenario, of a company that's going to make this like totally passive and totally easy for you and everything. I would say the only question that you haven't answered for me is like, what's it look like? What do one of these properties look like? Let's get into the deal, GC.
There you
Explain
go.
this to folks.
Yeah, it's great to just have a little bit more tangible. Let's talk about it. So, new construction inventory makes up about 70-80% of the inventory that we serve our clients with. So here's a nice picture of a home. Your purchase price here of $225,000, very normal. So while we were showing the median income of Jacksonville at 366, I believe is what the slide was, and call it the average supernova city was probably 450 to 475. You actually have the opportunity to invest in workforce housing neighborhoods in Jacksonville where your purchase prices are going to be significantly lower than 366, right? Here's a great example, 225 for this currently available home. And just to set the right expectations, your purchase prices are going to be somewhere around maybe 200,000 to maybe 280,000 on the very high end. Mm-hmm. But what we're going to ask you to do is to break some of the kind of the things that hold normal real estate investors back, break some of the emotional attachment of maybe putting yourself as the one who's living in the home. Think of this as a widget. We think about what has made Lee and Michael and a number of our folks here in the chat very, very successful. They're not super emotional about how that house looks. They're not super emotional about, things that may go really well in the property or when things go wrong, right? They're kind of even keeled. And the reason is because the home is a widget in terms of an investment. Yeah. Now, on the other hand, there is a renter that is living in that home, and my team is dedicated to making sure that renter has an incredible experience. But for you as an investor, it is okay to think about this as a widget and to lose some of that emotional attachment. And that's really critical because you're going to be holding on to this investment for a very long time. And what that allows you to do is to look at this like a financial instrument. And so my team would sit down with you and we would be able to walk through these numbers that you see, your portfolio investment summary, which is going to show you in essence, listen, you came with this amount of money. Here's what it's going to grow to, and here is how long it's going to take. We're also going to show you how's that broken down. How's that going to work between the different profit centers? And what you'll find is that the largest contributor to your wealth is actually from home price appreciation, which goes way back to what Pablo was saying early on about how important it is to identify the right market. We talk, and we show this over and over and over again in the show, so I hope you continue to join us, but 60 to 80% of your overall wealth, once you own this asset for a full market cycle, you're going to look back and you're going to 60 to 80% came from home price appreciation. So we've got net rental income, tax savings, principal pay down, home price appreciation, inflation hedging, inflation profiting, all very important things. But the market and home price appreciation is going to be your biggest contributor.
Yeah. And, this graphic here, which you can get by texting Tiara and getting this whole presentation, right? We do this all the time on the show. We break down these multiple portfolios and we see it. And I have this smile on my face because I remember, I think the first time we talked to 5 profit centers on this show, like 4.5 years ago, was when Keith Weinhold came.
Really?
He's kind of the guy. Yeah. I remember Doug Orr being like, oh, I love how Keith breaks down 5 profit centers, right? Like, I feel like he's kind of the guy that put that concept on the map.
Yeah.
So I assume that his community knows all about this. Mm-hmm. We've done a step further and we break down multiple portfolios that way. And when you look at it in this pie chart, we call it the Pac-Man principle.
That is true.
Right? Because this 60 to 80% of, the pie being home price appreciation, when you break him down in a pie chart, it always looks like the Pac-Man and everything else looks like the mouth, right? So, Gregg's got tons of these, right? And the team and Tiara has tons to show you of like different portfolios from different times in different ways, whether they invested in cash, whether they invested with financing, whether they invested in their retirement account, which is something else that you can do. It always looks like a Pac-Man when you look at where the wealth pie comes from, right? So really, really important concept. If you join us on Tuesdays or listen to the podcast or watch it on YouTube, you're going to hear the Pac-Man principle all the time. But I love how you broke that down, GC. And here we are, right? Like, this is what the investment looks like based on where we're at in the market right now and the price point of these homes and being able to put down 25% and get positive cash flow. You're able to do it now in like a minimum investment of 50 to 75K. It literally was 75 to 100K before interest rates dropped.
That's exactly right.
Which is another good deal.
Mm-hmm.
This IRR of 10 to 11%, which is I think if you talk to if you talk to savvy investors and you're like, man, can I get a super risk mitigated 10% on my money? They're going to say all day, every day, son.
Yeah,
Right?
100%.
Yeah. And you know, these interest rates being at 4.95% right now is really a great deal. But I love the idea of, man, this growing downtown, this idea, the way you broke down, right? Like if there's a growing downtown, everybody thinks, how can I invest in the downtown? But that's the billionaire's game.
Yeah.
You know, and there is $4 billion being invested in downtown. But by investing in these workforce housing, single family homes around it that live around there, you essentially get to invest alongside with billionaires in a supernova city that has been certified by like the institution with some insider info that you just got on this show. And that to me is just like bing, 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 all the pleasure centers of the brain.
There you go. That is the strategy that JWB employs. It has been proven now over 18 years. We have a ton of success stories, and we'd love for you all to be one of those success stories as well.
And if you want to hang out with us some more, like we said, we do this every Tuesday at 12:30. If you like GC's hair and you like my stories, that come on by and hang out with us. Our community's here. They show up with us. I got to say to the community, like they've heard this exact talk track at least 3 times.
Yeah.
And they still show up on Thursdays because they care so much about this like mission of retirement doesn't need to be so difficult.
Mhm.
And it gets a lot easier if you figure out the real estate game. And the best way to figure out the real estate game is to surround yourself with great people and a great team that can do this for you. And the fact that, you know, you all show up here and you give people your number, Lee and Michael giving the other Michael their number
Yeah.
and stuff like that. You don't have to do this, man. So I just really want to thank I think there's probably about like 9 folks from our community and about 3 folks from Get Rich Education. And just really, really appreciate the time that you take to show up every Tuesday for the stuff that we do, but even more for these like Thursday kind of like intro new people to our community and welcome them in and be that warm hug that Lee is famous for. And somehow he's able to do it via webinar chat.
I'm so glad you brought it up. I've been sitting here smiling the entire time,
It's
waiting
cool,
to
man.
say thank you to you all, to the Not Your Average Investor community who continues to show up. You know, it's about educating yourself. If you haven't taken the leap of faith and invested in single family rental properties yet, there's an education component, but it's not enough. You need community. You need to be surrounded by people that have been there before and are willing to put their hand out, give you their phone number just because they care, giving their time to be here to support you and to support us. So couldn't thank you all enough. Thank you guys.
Speaking of the community, we got a couple notes here from them, right? Michael Santorio saying, having been invested in real estate since 1989, if you plan on investing in real estate, it is critical to choose the right property management company. We started with our first 3 Jacksonville properties in 2016. Last month, we picked up our 13th property, all managed by JWB. Let's go.
Man, that is incredible. Michael, I was just revisiting when you came down for the Not Your Average Investor Summit, and you graciously gave us some of your time to share your success story and a testimonial. And I was just looking at it the other day and just so thankful for our relationship. It goes so much beyond just, you know, producing a return on investment, truly a friendship there. And just so thankful that we've been able to serve your family.
Charity Graham, who's also charitable with her time here by showing up on these webinars. She's saying, for novices like me, it's so valuable to hear from different angles over and over. It deepens desire to do it.
Love it, Charity.
Love it, Charity.
We're going to be here every step of the way with you, Charity.
Yeah.
When the time is right, you're going to be right there with Michael.
That's right. Try to make it frictionless, right?
There you go.
Love it. And Gerard Wendling saying, always have a new golden nugget. So we strive for that, right? Like we hope to deliver extra value in these things and reward you for showing up. That being said, if you want to keep showing up this Tuesday, we're doing a really interesting show. It's called The Death of the Landlord, or like why the landlord is an endangered species. This idea that, man, real estate investing is so great for everybody that invest in it and the companies that are operating in the space. And it's a growing space, but it needs to be great for the resident in order to work for you.
Mm-hmm.
So this thinking of being a landlord needs to go out the window,
Mm-hmm.
right? Like you gotta treat your residents like residents. They're partners in this equation. And we just really believe in this notion of like bettering the life of the person that's paying down your principal and your mortgage is in your best interest. And we don't just believe in bettering their life, but we really believe in like taking them from being renters to being homeowners.
100%.
And we're really going to talk about that on Tuesday. I think it's going to be a fun conversation.
You know, it's hard for people to make a decent return on investment But some people, even if they can, they have to make that trade of like, you know what, I'm going to make money, but I feel like somebody's losing on the other end. And it doesn't have to be that way. Sometimes people feel that in real estate, right? It doesn't have to be that way. You can work in an environment, make a great return on investment, and watch your resident prosper. So we're going to be talking a lot about that on Tuesday. I am super excited for you all to be there. We are going to share an incredible announcement on the show on Tuesday, and it's going to be, we're going to share it with you all first. There's actually a press conference that we're hosting in Jacksonville. I can't say exactly who's going to be there yet because I'm not allowed to say that yet, but many important people will be at the press conference where we're going to announce it with our entire community here in Jacksonville. But we're going to give a sneak peek for all of you for the Not Your Average Investor show next Tuesday. So it's going to be incredible. One of the most important and proud moments that I've had as one of the owners here at JWB. We're going to share on Tuesday.
Big teaser there, GC.
About that, huh?
You didn't say that on Tuesday about it.
No, I'm getting more excited about it.
Big teaser coming out. Breaking news. Oh boy. I can't wait to hear this announcement. We hope to see you on Tuesday. We hope that, Michael Phillips, anybody else that's new here, you're here. Make yourself comfortable. Hang out with us. Show up on Tuesdays or download the podcast or watch it on YouTube, right? But like the center of the nucleus where you meet everybody else is here. El amigo Bill Shields is checking in over here in the chat. Buenas tardes, Bill.
Buenas tardes.
That being said, from now till Tuesday, if we don't see you, any pieces of advice, GC?
Don't be average.
All right. See ya.